Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for May 21st, 2024. Remember, trading futures involves risk. It is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. Let's get right into it. I think we've got a moral victory for the day for corn, wheat, and beans. Actually, let's kind of just hop right in with wheat. We haven't given it much love, praise, or discussion the last few weeks. Just in a, clear-cut uptrend here, we can throw some channels up, which I'll point to, I think, a little bit higher than 750. We are starting to get back into the old, range from last summer for wheat. We're about halfway through that range right now. And, I hate to also, sometimes have to play the part of pessimist somewhat here, but if you, really throw up a trend channel on wheat, we are kind of up into the upper bounds of a very, very big trend channel lower, which is, constructive if we start to go through these levels and consider that, the wheat market has been just absolutely beaten up in the last several months to really the last 2 years. So it's been really refreshing to see this now, $1.50 rally from its lows in the Chicago July wheat. We're going to get a 55-day moving crossover over that 100-day here in the next couple days. The 18 days crossed above all our major moving averages and is very likely a pretty big supportive area. And, until we start breaking below there, it's an uptrend until it's not. I do think we're starting to get long in the tooth in all of our row crops, though, for the rallies this spring. And certainly if you're a producer that hasn't done much hedging, this is, a call to action to anyone that, and a reminder that, hey, back in these, past rallies like last year that looked kind of very similar to what we've got right now, there can be very big volatile moves between now, July, and, the end of the year. Just look at last year, folks. This is just like that run up. We're staging above the 200-day right now. I'm not saying we can't continue higher. I'm looking at, where we are in the market with, gleeful exuberance because we finally have, some levels that we can sell into from a producer standpoint and do some marketing where we're not feeling the pains that we were in February, right? Anyway, needless to say, wouldn't be surprised, though, to see pullback still into the 660 area for wheat as we're kind of marching our way higher. But clearly, wheat trying to lead the way here in the near term and giving us a little bit of a rosier outlook here in the near term. Flipping over to the 4-hour chart, we seem to be, kind of making halfway back for the month, so to speak. That 645 area held. Next upside targets towards 720, just from a short-term technical perspective. Again, we can throw up some trend channels that are pretty aggressive here that, also point towards, trend resistance up there to give ourselves an area that, wheat might be marching towards in the near term, establishing itself, trying to get a close above 7 today. I really thought they might do it, but certainly closing above the old high for the month of May was a big, big victory for wheat, and this bull pennant that pulled back into effectively a 50% pullback, and now the market has potential upside targets and a swing that could potentially take us there. To though talk about where maybe a little bit of a lesser, sorry about that. Flip back over to our charts here. Click the wrong button. There we go. Talk about one of our lesser performing markets here, July soybeans. Traded the day here down 11 3/4, 12.36 1/4 into the end of the day. Highs of the day at 12.49 quarter, lows 12.30. Back and fill price action, a pullback after yesterday's run up and breakthrough on solid volume, right? We had this volume push above the highs of the week. That's a tell, in my opinion, from the market's participation that, hey, there's buyers here. It was real. It pushed through key levels. Got rejected before the prior highs. That's kind of fine because, as a colleague pointed out, this is that potential coiling of a spring, right? Before it blasts through that ceiling, if it wants to go there. the 200 days is up above there and would be the likely next area. But today's inside price action doesn't really leave you with much to hang your hat on in either direction, other than, hey, what did we do into this moment, which was, get some volume buying that pushed us through the highs of the week at 1230. And today we saw a pullback in price, but it was also a pullback in volume. So we had that declining volume, which has been very indicative of the pullbacks that we've seen in beans in this uptrend that we've been in since February, but generally speaking, since the start of April, we saw increasing volume in the uptrend. Then we rolled over, saw decreasing volumes in the sell-off. Then we had a big volume push again, right up into and through our other major moving averages, an establishment back into support and finding that 100-day of support again, declining volumes during this period of consolidation, and now we're seeing a volume push higher, a little bit of a lack of volume here today, but an inside day above the old highs of the week. Again, a moral victory, in my opinion, for the July beans, and a push through that 1250 to 1260 resistance zone now. 1283 200-day moving target seems like your logical next area. It's totally a possibility to get up to fill that gap at 1312, 1310. But I do think, at that point, if we'll look at some measured moves and some measurements here, you're starting to get towards the upper end of where I think the potential for this market could be. I am cautious because you look at a market like November beans, and we are much closer to fill that gap and already testing the 200-day for all intents and purposes at the highs of May, which is now down at 1229. Today's price action in terms of volume and reciprocation, we didn't get as big of a push yesterday as we did in July beans in the November contract, but hey, they are still trying to trade in the upper ends of that range that we've been in for the last week. A moral victory, even though a red day for soybeans might have, saying this, tongue-in-cheek, might have actually been a buying opportunity if we see the market, obviously progress higher. We'll all talk about that. But the fact that it did all of this in declining volumes when it really could have accelerated lower, again, moral victory for the bulls, but doesn't really leave you very comfortable knowing that we're still inside this larger range that, November beans have been in from 12 to 12.20, and that 20 cents. Hopefully it will break. I'm in the camp that thinks we've got one more leg higher, and that last final leg could be terminal. There's a lot of guys out there talking about this three-wave move higher and how it could be completed already. I don't deny that at all. If you're a student of Elliott wave and even measured moves, so to speak, this is three legs up into almost equal legs. It's very indicative of a price correction and a larger downtrend. But there's other outside participating factors like that declining volume we've seen in the downtrend, the fact that we're still kind of creating a bull flag and a pennant up in the area we are, with some bigger levels above that would fill and, so to speak, clean up the chart, like that gap fill up at 1244, for example, in November beans, all could, showcase for a reason higher. Then the kicker in the hole for all of this is the funds are still short, and this entire rally has been predicated on the idea that they are covering out of the market, and that's been their buying power that has driven price higher. It was their selling that took and squeezed price down to the lows of February, and it's been their buying and short covering that has really brought the market back up as well. And that is going to be met with an equal or some amount of producers selling because, hey, this is the best pricing opportunities we've had since January, and we're starting to get close, and certainly in markets like wheat, you're already there at some of the best pricing you've had in almost 2 years now, going back to last fall, and I guess a year in time, not two, but going back to, a full year at this point. I think we're going to be able to say that about corn and beans here shortly, but we got to move. We got to get above these levels. You got to press above the highs, of the week in July beans and November beans for that to really come to fruition. And if we do, I see a very good case of why that could be on the charts. Okay, so let's take a look at those 4-hour charts real quick for beans. Take a look at the channel heading higher that we've been in, equal legs up. Rationally, this was basically a full 50% pullback, a little bit shy of it, maybe 3 cent front run, but generally speaking, to the $12 mark, was a full 50% retracement for this entire decline. I mean, I can't rule out another sharp move down there where this would become a, 3 waves up. Then you have a 3-wave pullback in terms of a B wave, and then we have our final grand finale of a C leg. But for the time being, there's still the opportunity since price action of last week for this market to continue higher. And today's price action did nothing, in my opinion, but test back, like I was mentioned earlier, back towards 1230 and back towards the highs of last week that we ultimately broke through on yesterday with a substantial volume push. And if the assumption now is that we would expect to see a similar volume push and move higher, tomorrow, if this support is real and if it, is holding on the charts as we're kind of thinking about it. There is a tiny gap here that, I don't know how some people play these intraday gaps down at 1218. The fact is the market traded and closed at a price that we opened above and higher. We did trade back into that day's price action, so it doesn't look like a gap on the daily chart. But there is definitely a gap here of where we closed on last Thursday and opened up for the Friday session, and we have not gone back down to that 1216 area. I would constitute this one as a bit of a runaway gap and go, mainly because we gapped up, ran to highs of the day, and at some point during the day came all the way back down to test the prior highs and traded by a half a penny into the prior day's range, and then found our way back to highs. The next day then was explosive volume higher. That would be the following Monday, yesterday's trade, to which we've kind of back and filled towards this old price band or this old highs. You can make a case here too that you're 50 back from the lows of last week through the highs of basically this week. It comes around 1227. So the market's, in my opinion, since last week's lows, now taken 2 steps forward, 1 step back. All that remains is for progression to now take 2 steps forward again, and those 2 steps would be into new highs and towards the 1280 area in the near term. That would also take you above this channel support or resistance in the near term, which there is arguably a new channel on this chart that is a little bit steeper, but trying to somehow formulate itself. Not sure how to draw it just yet, but it will, I think, come, as of right now, it's something like this. It's not the cleanest thing in the world, but it might look better on different time frames. But generally speaking, it is still trying to hold some kind of trend line against the lows higher here, and pushing higher could target towards 1280 to 13. Failure to do so, this can have all the ringings and workings of a failure to break through highs. And, the next move down, if it breaks through today's low and yesterday's low, that gap fill is 12.16 will probably get hit too. And then, now you're talking about a retest at $12. Below there, man, I mean, there's not much to talk about before, 1160 if we really get down to it as well. So worried a little bit that if we don't see the follow through we're kind of looking for beans here in the near term, there's certainly the cause for concern, and the bears can still make their case here. But looking at the whole bigger picture, it does seem like the path of least resistance is still potentially up here. And certainly, as we've looked at in the past, those commitment of traders data, and you can check out my Twitter feed they're posted as highlights in my feed. So you should be able to find them right up at the top of it. But I did take another look here yesterday at where commitment of traders stands from last week again. Again, today is the day the next reading is taken. So I don't think that in the moves we've seen, we're going to see much of a change from last week's reading, because we're basically in the same range we've been in, which leads me to believe that we're still very short, or the funds are still very short, I should say, in their commitments. And we need to see that volume push higher above highs to really start seeing them cover the remainder of that out and potentially even flip long. And if you look at historical data, they have almost never gone from a period of extreme short position sizing and not taking the market back to a point where they have been able to flip into a long position. So still fuel in that rocket ship if it wants to continue higher. November beans holding on a little bit stronger here in this, bit of a range or wedge-like price action. You can kind of look at the old and see this old trend line against the highs that today and yesterday we broke out of, came back to test it as support. And to me, this looks like a potential little bull flag or pennant starting to break out. And today was the back and fill price action to test, the old, I guess this would be called a kiss your mother, a KYM type setup by others. You break out of the, you run out the door and you come back to kiss your mom before heading off to school and continuing on. The concept is that old broken resistance, as this trend line has now given way, was tested in this pullback of support today. And tomorrow, if we see a push through the highs of today and the highs of yesterday, basically the 1220 figure, highs of the month are the next thing on the table. And, above there, you're talking really filling this old gap and seeing how high this market can go in the environment we're in. Again, $13 to the upside is where a much bigger trend line comes in. I'm not willing to say we're going to go there. I'm simply looking for one more push to 1240 to 1260 for November beans to clean up the chart, filled old gaps, get us back into the price range that we were in last fall. And I don't, if I was a producer with some grain to sell, I think that would be a very wise time to start to get some forwards going, let some of the new crop go, because this is certainly turning out to be a year where the idea of a drought or drought conditions is just not even being discussed anymore. Like, we went from last year watching the drought maps daily to I don't even see a point in bringing them up right now. We're watching, real storms roll across the country and bringing potentially too much water, which, hey, is another reason for, in the short term and horizon, for things to maybe continue higher as well. But I'm not a weatherman, and I'm not here to speculate on the weather either. We certainly consider it in terms of what we think the fundamental trade might be doing and how that could affect the crop. But gambling on a weather event is no different than going to a casino and betting on black or red or playing a card game. You're just looking for the outcome of an event to reward you, and that's not a business decision at the end of the day. Real quick, we saw the crop progress highlights yesterday basically bring us back to the 5-year averages and even above for soybeans. So corn back to 70% planted. 5-year average was 71. Last year we were at 76, up from 49% a week ago. We're getting it done. Now, the weather of this last few days is probably going to slow up some of those places where a lot of that progress was made. There's no doubt in my mind that that's the case, but it pushes the conversation back out another week here. I think that gives you at least enough concern for maybe more of a weather market and short covering to begin. But now we need to see the volume pushes through the levels that we've been talking about to confirm. And we'll see if that occurs. July corn, much like the beans, kind of in their channel higher, a much cleaner channel. If anything, today was just Friday was a test of that trend line support to some extent. Really, it was a test of the 55-day moving average, which was clearly a sign of resistance along with that 18-day here until we finally pushed above it into the end of April. We then held those areas as support. Again, volume pushes through the big levels that we care about, volume's increasing. And then as we walk back and consolidate, volume was decreasing. Then we got another push higher, which took us above the 100-day, volume increasing. Then the consolidation period of a little lower price action to test it as support, volume was decreasing. I mean, I can go on, but the idea that we were pushing higher and the participation in the market has been in the green shoots, and the red ones, the red pullbacks have all seen declining participation in volume, suggests that we are still in an uptrend for all intents and purposes until we're not. Yesterday's price action in July corn was a great victory to get us back above that 18-day moving average and close there. Today, we clearly, and the 100-day for that matter, which is that blue line, and all staying above that 55-day as support. This is just a fight over the trend, amongst these big technical levels that clearly people are participating on. Kind of leaves today's price action leaves us wishing and wanting that, we were above yesterday's high, of course. But similar to the soybeans, I see this as, again, a moral victory for the bulls, but far less, far less of one in terms of getting, I guess, away from levels that keep me concerned. Below 450 on this chart looks like some form of, bit of a head and shoulders. You got a head, left shoulder, right shoulder isn't as high as you'd want. It could get up to 470 and fail, but this neckline, or pennant structure basically breaks below this 450 low. That puts you below all of the major moving averages and would reverse trend lines and a lot of looks that you would consider on this market. It would be very strange to see that, considering the funds and that position had not, in my opinion, covered out enough. But, history and historicals there can be misguided. This could be the one year that it doesn't follow things too, right? But I think in the declining volume the last few days and the participation off of some of these levels and where we've seen support for December or July corn still suggests a move to 482 and that 200-day, which gets you barely back, to the low end of the range we were in last year. I think there is the premise we could get and test towards $5 corn still here for July, but things got to hurry up, and that 40 cents higher here could be the last hurrah and finale where we find resistance and roll back over. I'm concentrating a little bit more in the corn market on December, because I think that's where there's more of an opportunity to really get some sales done for new crop here. Again, we're marching back to some of the best pricing we've had all year, and above, the highs of this month take you back into the price ranges we were in, a year ago, which is a sigh of relief if it can get there. Much cleaner and I think steeper of a channel here, and the real rosy, the one rose spot, I don't know what to say it, but the one good thing I can say about today's close for December corn, above that 18-day moving average again. That's something we can't say about July, but certainly in the short term, if that was a signal or an indicator for people who were short from this last week thinking we were going to break through it, we're starting to see reasons to maybe feel concerned. And if tomorrow we get that volume push above today's high and take us back towards the 200-day around 493, maybe not all in one day, but if we see that push higher and increasing participation in volume, this has all the hallmarks of, yet again, one more consolidative period on lower participation, back and filling into the major technical areas that we would expect to hold for an uptrend to continue. And that uptrend, again, I'm not willing to say it's taking us back to $6 or even $5.50 December corn, but a move back above $5, I think, is the next path of least resistance for the market. We've got the fund position still covering, all the reasons that we've harped on, and a move back into last year's, middle of the range basically would take you to 520. I earlier had stated around 510, I think, is kind of my upside target for December corn. I'm willing to kind of push that towards 520 now, but I'm not willing to go much higher than that without seeing what participation looks like above the 200-day again and at a near $5, okay? We're going to take this market 20 cents, 30, 40 cents at a time. It seems to be all it moves before having corrections anyway. This hasn't been a straight line short covering rally, and I think you have to respect the fact that there are channels here the market has been in and continues to reside in, which is not a comment about its weakness or anything. I just think that there's a level of predictability here that you need to kind of pay attention to the way things are trading and what some of those levels of invalidation are. So again, I think we've pulled back into an area that very interesting on the chart. Let's take a look at the 4-hour chart for corn and see what else is there to dive into. Can probably get some cattle in here for a minute. But yeah, doesn't look great, right? Doesn't look great that you couldn't get followed through yesterday, but still holding back into that 50% line, 455 in July corn. That's just the swing from the channel lows and the lows from the month of April to the new highs. Remember, corn, we saw this market as taking 2 steps forward, 1 step back, held 61.8 lines, then took 2 steps forward, progressing up to 670 or 470, excuse me. After the market, got targets, so to speak, filled from that swing. Our price targets were hit. The market has now taken 2 steps back again, and this 2 steps has been a bit of a fight, right? 2 steps forward back, whatever. It's or 1 step back has been a little bit of a fight. 2 steps forward now would take you to 484. Upside, extended projection towards 5. And we know that this channel that we've been in seems to, intersect or meet those levels sometime, a week from now, up around, 485 and what have you. Back and fill price action in the corn, was more of a last week long thing, right? We kind of pulled back to test this old breakout area. It was the highs of April and the highs of March and April here, that the market has, pulled back after getting through to come back and test a couple times. Without breaking below 450, I'm not totally convinced about more downside, but I also know that hold your breath here, because if we do roll over, things could get and accelerate to the downside. Just as excited as I am still that, hey, the bull trend or the uptrend still seems to be alive, and there could be, another leg higher. That unfortunately I'm also, out there trying to make a point that it could be the last, because once that rocket fuel from the funds covering runs out, there's not much more but, commercial and producer selling. That is, the participation in this market. Same idea on the July chart applies to the December. 2 steps forward, 1 step back into 460. Channel support held, took us up to channel resistance, the 490 area for its upside target. Market's now taking 2 steps back yet again, even cleaner here and holding really above, the highs of April. And even today, barely making it into a test of the highs of March there, and closing above that 18-day moving average around 482. A small moral victory for corn. If we see that volume push now into tomorrow's price action, I mean, heck, it was even maybe arguably a 50 back, to some extent. I know if you come off the highs here, there's also a 50% short that is held to the tick. And that's also why, I'm not willing to sit here and say that this is going up with absolute certainty. I mean, those aren't words you'd ever hear out of my mouth anyway, because we know that nothing is certain in trading. And the whole reason we look at and use marketing for our production is because there is uncertainty, and we are trying to minimize the risks of uncertainty. So 50% short from the 496 high to low here. It's still holding. The next push higher, though, I would immediately assume we are going to head towards 490, the 618 area, the old highs from middle of last week. That would be the area I would expect this market to kind of push up to. I am, aware that creates a bit of a head and shoulders pattern, right? The left shoulder here, the head, and the right shoulder push up to 490. So, the pullback at that point will be key to see it hold, before we get to support. And, if the market's going to continue higher from there, it will, kind of blast off from all intents and purposes now, and head towards $5 probably rather quickly, as you will have a failed head and shoulders pattern, which will, have a round of short covering associated with it. But success of that head and shoulders pattern very much opens the door below the 476 area to lows of the month at 466, and really lows of April around 460 as well. And that would put you below trend line support and channel support, and this would look very much like a completed 3 legs up. So as hopeful and excited as I am that there's still the premise of another leg higher, I'm optimistic that if and when we see it, it'll be a good opportunity to, get some hedging done. If you are, looking for the very short-term trade, I think there's high risk here that this market hasn't proven itself to us, but we've at least been able to identify some lines in the sand, below 475-ish, 476, let's call it, above, 490. Those 2 levels on December corn get really interesting for one way or the other, right? Above 490, start to talk about that move to 5 and 520. Below 475 might be a time to sell with downward momentum to some extent, and get something sold in case it really rolls over and we're revisiting, that low from April, because this, for all intents and purposes, could be a completed corrective structure in 3 waves up. But I am seeing at least the short-term signals that, hey, that structure can change. And that's the beauty and the curse of Elliott wave and looking for patterns in the market, is that they're only good for the moment, and they always have invalidation levels or levels to where you have to be aware that change to your analysis must occur. And in this case, above 490 starts to break the head and shoulders idea. It would negate, the idea of this being a completed 3-wave structure, and it would probably put this market in a period of price discovery higher, whereas below 475 for December corn has the equal and opposite effect potentially to the downside at this point. So we will see. Real quick, let's just take a look at a couple of the cattle markets, because I should probably just do a whole video on them alone. August feeders 180.42 up, 187 on the day. New highs of the month through the 200-day moving average. There's nothing on this chart, in my opinion, until we get back to the 184 prior highs. Other than maybe a downward sloping trend line and a big wedge. No reason that this market couldn't turn back over and revisit the low end of that range, but this does not seem like the type of rally I would sell into from a speculative standpoint. I will not sit here and say that there aren't opportunities here to get some sales done or to lock in floors. Give me a call if you want to talk about how to utilize the board prices and the CME for doing so, because I do think, as we march higher here and if we head towards contract highs, I don't think it's a terrible idea to think about risk reversal strategies where you can set potential profit targets above, bring in some premium for having done so, and use that premium to then turn around and buy puts to create a floor in the market. A window strategy, a risk reversal strategy in an upward trending market for a producer becomes a very viable marketing plan, because it not only gets your floor in price, protecting your downside margin, but also creates a profit target that if we go to, let's say you're able to sell a $200 call, I would probably go further out than August, maybe even into early next year, depending on what your cycle, your on feeds and herd cycle is. The privilege of being able to sell calls that far out and have that be a profit target rewards you for being able to bring in some premium today. There's, of course, margin risk associated with a market that will continue to run up there. But for a true hedge, at least on your balance sheet, it will put you ahead. Okay. So continuing to trend higher, we're above the 200 days, all those good things. We're going to look at feeders real quick in the August 2, up 135. Still haven't broke out from the highs of April. That's the next level at around 261.60 that I'm looking for. But today was the day they tried to break out above that 100-day moving average and couldn't quite do it. We're holding the 55-day there as support. A little bit of a bull flag, upward, 2 channels I see in this chart, and one of the channels will take us potentially up to 265. That really calls into question then, the highs from February. So interestingly enough, it's the fats that are kind of leading here, and I'm not so certain we won't see the feeders maybe pick up the pace and turn around and catch up. But that's a discussion, I guess, maybe for future, the future trading room. June live cattle, bring up the right year here. There it is. June live cattle having broken out of that steep downward trend line. Yeah, these are some old trend lines we had been watching on the chart that gave way. There was an old channel there. Channel there. This one's off a little bit, but you can see the channel and the trend line higher that is holding. I can't rule out pullbacks to 180 to 179 still, but they're probably buying opportunities if they occur. But this looks like an uptrend until it's not, making new highs for the month. Breakout of this downward sloping trend line, which we're just about at, would call into question the highs from March. And honestly, at that point, you got to wonder and start talking about swings up into new contract highs for the fats if they potentially get there. August feeders, similar idea. We're breaking out of a smaller time frame trend line. That was one drawn from highs here from what is that, February through, or March, excuse me, through the April high. We broke out of that last week. The contract highs to the highs of February, March, that isn't up until 266. So I think now that we're cleared this, clear 260, 266 next, and then if we clear there, now we can talk about new contract highs. But both feeders and fats look like they've spent the last year bottling up and coiling up in this what would otherwise be considered a big continuation pattern. If it can push through resistance, new contract highs would be likely next. And you know, the support and that we've seen in the box beef cutout, holy cow. I think we've got a situation of not having enough cattle moving through the system. You can look at, you know, the kill rates and stuff and say, oh, well, Dan, isn't that things processors slowing down? Maybe, but I think it's a fact they just can't get enough cattle to process versus and a supply issue rather than a lack of demand. Said that before, and I'll say it again, and price on the chart seems to continually agree with that here until it doesn't. So, all right. Well, that wraps it for me and today's strategy of the day. I hope you enjoyed today's session. Give me a shout out on Facebook, social media. Shoot me an email, dhussey@zaner.com. Leave your like and comments below, and any questions you might have. Anything you want to see in these videos, drop me a line, send a message. Can always get that included. Have a great day, everybody, and we will be back with you as price action develops. Take care, everyone.